Hey, good morning, everybody. This is Mike.Baker, sales manager for the long-term care and ancillary department with Ritter Insurance Marketing. Appreciate you joining me today. I want to talk to you a little bit about the evolving long-term care market with regards to the solutions. You may or may not be aware of everything that's out there on the market today, but at least wanted to get it out so that you're out there talking to your clients. You're at least better prepared to maybe recognize the opportunities that are available for your clients, and that obviously will allow you to better serve their needs. So I'm going to cover a lot of information in a short period of time, but just to kind of establish the fact that, the good news is we're living longer, but the bad news is we're living longer. So the more likely it is that the longer we live that we're going to need some type of care. But contrary to that, when we do associate long-term care with maybe something that happens as we do grow older, the fact still remains that 40% of people needing long-term care services are under the age of 65. So, long-term care can affect anybody at any time, at any age, regardless of, their health, regardless of their age. So again, just kind of keep that in mind and don't kind of pigeonhole long-term care as maybe just an older age type of an event. But the other thing, to think about is, really truly is the single greatest financial risk that folks face as they grow older. But unfortunately, it's the one risk that most folks haven't done anything about. So the good news is there really truly has never been a better time to be talking with our clients about long-term care. What really drives that long-term care conversation for most clients is a personal experience. And what I have found is that more people that you talk to today have a personal experience, family member, friend, somebody that they've known that's needed some type of extended care. So extended care being home health care, assisted living, adult daycare, or skilled nursing care. So that personal experience really drives the conversation, and more people have had a personal experience. Again, as I said earlier, the other thing is we're living longer, and the longer we live, the more likely it is that we're going to need some type of care. And regardless of everything that you may have heard or know about what's going on in the traditional long-term care space, the cost of care continues to rise. It's not going to get any less expensive. The risk is only going to continue to increase. Modern medicine and technology is allowing us to live longer and live longer with chronic conditions. So it really is imperative that as advisors, we recognize those opportunities to better serve our clients. And as I said, the number of solutions that are out there in the market today has really evolved considerably in the last 20 or 25 years. What originally started as just a maybe traditional market space has evolved now with the linked benefit products, the life and long-term care products, the annuity long-term care products. Most life carriers now, if not all life carriers, have some type of a long-term care or chronic illness rider. And then the other one that we do talk a little bit about, because it's kind of forgotten in some cases, is that short-term care solution. So there really are 5 different types of solutions that we have to offer our clients, and regardless of their health and their wealth, one of those 5 solutions can probably bring some level of benefit, albeit maybe just a home care plan on the short-term care side. So what I really want to kind of focus on today, maybe a little bit more so, is on those linked benefit products. But the first step that I can't really stress enough is just being able to pre-qualify that client. The more information that you can get up front with that client with regards to their health, the better job that we can do in pre-qualifying those clients. Because at the end of the day, that's really going to some degree, kind of dictate maybe where we're going to be able to go from a solution perspective. So we do have a worksheet that you can use to gather that medical information to help pre-qualify those clients. You can find that on ritterim.com. We can certainly email that to you as well. But again, with regards to that linked benefit space, again, a very broad market when you think about the linked benefits as well as the life with the accelerated riders. So really it kind of broadens that market from anything from frankly down into the 30s the whole way up into age 80s. So again, very, very broad market. With regards to the linked benefits, again, probably more of a middle market, upper income, higher net worth type of market there. Folks that do have assets that they don't necessarily need from an income perspective, that could potentially be repositioned either as a single premium, which the linked benefits historically have been maybe a single premium product, but I think upon further review that you would find that what's happened with that evolving market is there are far more opportunities for clients to reposition assets over an extended period of time, 10 years, 15 years, 20 years, paid age 65. One carrier even has a lifetime. Another carrier now is offering a paid at age 100. So we're probably seeing as much, if not more, opportunity on those limited pay options as we are on the single pay options. So again, a very, very broad market, not just from a single premium perspective, but also from a limited pay perspective as well. So if you have clients, that are concerned about what if I never use a traditional long-term care product, I think I could self-insure this risk myself. I'm concerned about rate increases. Maybe they were declined for traditional long-term care, or they've looked at traditional long-term care before, but it's been a while. These are all signs of a client that may be more apt to have a conversation with regards to those linked benefits, because frankly, the linked benefit product, whether that client lives and needs long-term care, dies and never needs long-term care, or they just decide to walk away, the linked benefit product is going to provide a benefit whether they live, die, or quit. And that's really the appeal there. So there's still a market for the traditional product, but because of the evolving market, the number of carriers that are actually entering that space, the way that the policies can now be designed or structured, you really can accommodate far more opportunities with your clients to position one of those linked benefit products. Those funding sources could come from anything from just cash, checking, savings, CDs, money markets. We have the ability to fund these products with a non-qualified annuity. We have the ability to fund these products with tax-qualified money. So, again, there is a lot of opportunities regardless of, maybe where those client dollars are, to be able to come up with a solution with one of those linked benefit products. The advantages for you, as far as from a broker perspective, is, nobody likes to be in that position where you've sold somebody that traditional long-term care product, and now have to go back and have that conversation about the significant rate increases that we're seeing on those older traditional products. And I will touch on that here in a moment, that the traditional space obviously is kind of going through, there's a lot of fluidity, as I like to say, in that market, but the traditional products are more appropriately priced today. But as I said, I'll touch on that here in a second. Again, from a broker's perspective, the advantage is there's far less risk. Those linked benefit products, the premiums are guaranteed. Again, if your client never needs it, there's a tax-free death benefit, less any long-term care claims. If they do need long-term care, depending on their age, they can get some significant dollar leverage for long-term care, potentially as high as 6 or 7 times leverage on those dollars. And again, if they decide to walk away, there's a guaranteed return of premium. So the client is going to have more buy-in, and sometimes if there's other decision makers involved in that process, maybe spouses, obviously, kids involved in the decision-making process. For those kids, knowing that mom and dad, or even themselves, somebody's going to get a benefit from those products, there's more buy-in from all of those decision makers. Underwriting can also be maybe less stringent or a little bit easier process, unlike that traditional process that's a much deeper dive. On the traditional space where you have to go out for an APS and the phone interview and can have a very protracted underwriting process. In the linked space, in many instances, it's simply a phone interview. So, once that ticket or that application hits the carrier, the client gets the phone interview, within a matter of a couple of days or in a relatively short period of time, we can have an underwriting decision. The good news is we also have a carrier that will do full underwriting. So while full underwriting can mean a more protracted process, the good news is it does allow them to take a deeper dive. And in some instances, we may get more favorable underwriting with full underwriting on a linked benefit product. So again, that can be an advantage, but again, I go back to that pre-qualification, why it's so important to get as much medical information, because we want to make sure we're positioning the client with the best opportunity to have a favorable outcome, and we don't want to put you as the advisor in a very awkward position, to have to go back to the client and basically say, unfortunately, you've not been approved, because had we known that information up front, we may have been able to avoid some of those uncomfortable situations. So as I said, from an underwriting perspective, these hybrid products can certainly be more favorable for you as the advisor because the underwriting time cycle is much shorter. It is also much more favorable for the client because you don't have that protracted process. So, all around, it could be a much more favorable buying experience, for both you and the client. So keep that in mind. And again, as we kind of go through this information, there's obviously we're just kind of touching on the tip of the iceberg, which is really the intent of this is just to kind of give you a general perspective, kind of put it out there on the radar, not expecting that anybody's going to necessarily become a quote unquote product expert, but hopefully what you'll become is an opportunity expert. And that's the ability to recognize the opportunity with the client when these types of products may be a good fit, and then know that you have the ability to give myself and my team a call here at Ritter Insurance Marketing, that we can step in and be that resource for you. And kind of before I close, I do want to just touch briefly on that traditional space because of how fluid that market's been over the last several years. Again, as difficult as that market has been and the challenges it's created for the clients and for us as the advisors, the important thing to know is there is still opportunity with traditional long-term care products. So don't just discount those as a potential solution. While those products have gotten much more expensive, which is kind of the bad news, obviously, the good news is they're more expensive, so they're more appropriately priced. So the likelihood of seeing those significant rate increases like we've seen on the old products in the past are probably less likely. Again, the pricing assumptions are far more current, obviously, than what were on the old products. So again, when you kind of wrap those things up, again, you can feel good about still positioning a traditional long-term care product with your client. And we do have a traditional long-term care carrier that does offer a return of premium, less long-term care claims, and an optional surrender rider. So you can essentially create a linked benefit-like solution using a traditional product. So keep that in mind that still may be a very viable option. So in closing, I always like to close with a quote that I came across from Abraham Lincoln, which I thought was so appropriate relative to the long-term care space. And his quote is, "You cannot escape the responsibility of tomorrow by evading it today." And when you think about that long-term care conversation, nobody likes to talk about long-term care and what can happen and the consequences, but not having that conversation today doesn't mean that it's going to happen. So again, appreciate you joining me today. Hopefully you got a couple things out of our little talk this morning. Certainly welcome the opportunity to have any further ongoing conversations, provide more information. So give me a call. Again, Mike.Baker, Sales Manager, Long-Term Care and Ancillary Department here at Ritter. Give me a call, 800-769 1847. My extension's 262, or my email, Mike.Baker@ritterim.com. Again, thanks for joining us. Have a great day.